Friends, input tax credit under GST has been subject to new limitations and restrictions under section 38 subsection 2 of the CGST Act as proposed by the Union Budget 2022. There have been various other discussions, arguments, counter arguments on input tax credit under GST, like for example contesting of input tax credit on business promotion expenditure, etc. In our series on input tax credit, we have covered various topics, and this is another video on allowability of input tax credit on corporate social responsibility expenditure incurred by the companies. Whether input tax credit would be allowed on CSR expenditure or not has been a matter of discussions. Certain advanced rulings holding yes, it is allowed. Certain advanced rulings holding no, it should not be allowed. So to understand the allowability of input tax credit on CSR expenditure, let us understand the difference between what is normal course of business and what is furtherance of business. Say for example, a ship breaking company purchases a ship where its normal course of business would have been to break the ship and sell its spare parts. However, it got a customer for the entire ship and it sold the entire ship to the customer. Will this be in the normal or usual or ordinary course of business? Maybe not, because in the normal course of business, it would have broken up the ship and sold its spare parts. But there is a very thin line. Would it be considered to be in furtherance of the business, in connection with the business, to ensure business connectivity? Answer is yes, it would be in furtherance of the business. So anything unusual to the business may not be in normal course of the business, but it may be in furtherance of the business, as was held in the case of A. Abraham and Company by the Honorable Bombay High Court, wherein it levied CST or VAT on this kind of turnover of the company. Would CSR expenditure be considered to be gift? The Honorable Supreme Court in the case of Sonia Bhatia has held that a gift has to be voluntarily made and not mandatorily required to be made. CSR expenditure under section 135 of the Companies Act is a mandatory expenditure for companies with a turnover of over 100 crores to the extent of 2% of its average profit of 3 years. Hence, it is mandatory for these companies and not voluntary. Even if it is not mandatory for certain companies, but they incur CSR expenditure, it is to ensure business connectivity, business continuity, and business stability, to build up the brand image of the business, like we all see in the case of Tata's. The brand image of the business helps in business continuity and stability also. CSR rules provide that CSR expenditure are not in normal course of business, but it does not provide that they are not in course or furtherance of the business. There are certain list of items which are to be included as CSR expenditure, like for eradication of poverty, hunger, malnutrition, for enhancement of education, etc. It can be by way of direct activities like purchasing goods and distributing, say laptops, say clothing or furniture, or building up schools or supply of electricity in schools, etc. Now come to the Income Tax Act. Second explanation to section 37 subsection 1 of the Income Tax Act has been inserted by Finance Bill 2014 and the corresponding Finance Act, providing that CSR expenditure would not be considered to be a general business expenditure under section 37 subsection 1 until and unless it is allowed under section 32 subsection 36 of the Income Tax Act. The memorandum of the Finance Bill 2014 has explained that if CSR expenditure would be allowed, it would mean subsidizing the CSR expenditure to the extent of 30%, that is the income tax rate. But income tax is a different law. Under GST, section 16 subsection 1 very clearly provides that any registered taxable person subject to such limitations, conditions, restrictions and in the manner under section 49 can take the input tax credit of goods or services used or intended to be used for furtherance of the business. Business under 2 subsection 17 of the CGST Act has been very widely explained and defined as any activity of the nature of trade, commerce, manufacturing, profession, vocation, etc. and any activity which is in connection to any transaction which is ancillary or incidental to trade, commerce, manufacture, profession, vocation, etc. So it is a very wide definition and therefore any activity which is in connection to, ancillary to, incidental to business, trade, commerce, manufacture would be considered to be in furtherance of the business and therefore it is our respectful submissions that CSR expenditure is a mandatory expenditure which is required under the Companies Act 2013. It is not blocked under section 17 subsection 5 of the CGST Act and it is therefore in furtherance of the business. Maybe it is not in normal course of business, but there is a difference, a thin line of difference between what is in furtherance of the business and what is in the normal or ordinary course of business. CSR expenditure is in furtherance of business, may not be in normal or ordinary course of business. The same was held by the Honorable Calcutta High Court in the case of Birla Cotton Spinning and Weaving Mills, by the Karnataka High Court in the case of Millipur, India, and a similar judgment was held by the Honorable Sestat, Mumbai, in the case of SL Propack. The Uttar Pradesh Advanced Ruling Authority in the case of Dwarikesh Sugar Industries has held accordingly, but the Gujarat Advanced Ruling Authorities in the case of Adama India Private Limited has equated normal course of business with furtherance of the business and held adversely in the case of the appellant. Friends, a lot of water is may be flowing under the bridge in the case of CSR expenditure from now on, but it is our respectful submission that CSR expenditure should be allowed to be taken input tax credit off if the objects of GST law to remove cascading impact of GST is to be fulfilled in letter and in spirit. Thank you very much. Do keep on viewing our channel and liking and sharing the videos. Thank you very much.